Boom. We are live, people. Welcome to Stock Watch Sunday, folks. Gonna let give it a minute or two to let some people roll in, because I feel as if whatever has happened in the last couple of weeks, we've had a really big rush of people later on in the live stream, and I don't want to give it too much time, but I think we just give it a minute or two. But as we're waiting, let me welcome some folks here. What's up, Bob, Hope, Alan? Beam me up. Good to see you guys. All my normal mentorship peeps, good to have you here. Good to see you. What's up, Primetime DJs? Good to see you. Hope you guys had a great weekend. It's going to be a marathon tonight, folks. A marathon of earnings plays. And I might not get to your favorite one, but that's what we'll save for later if you guys have questions about ones that maybe I missed. But I went over top 20 earnings plays this week. It's going to be an amazing or interesting week, however you want to put that. But what's up, Jane? Good to see you. Pausing my Ozarks for your show. Well, I appreciate that I take precedence over Ozark. That's a pretty big deal for me. What's up, Chuck? Good to see you. Yeah, I'm doing really well. Had a great weekend. Hope you guys did too. And all right, well, let me go ahead and just get the pleasantries out of the way. What's going on? Welcome to Stock Watch Sunday, and welcome to Own the Chaos. The stock market is a crazy and chaotic place, and I made it my mission to help you own it. So if you have not yet subscribed to this channel, if this is the first time that you're experiencing the Stock Watch Sunday live stream, first of all, welcome. Hopefully I earn a subscription from you, and if I do, that you hit the notification bell to get notified every time I put up a video, which is on Mondays, Wednesdays, Fridays, and then Stock Watch Sunday, which you are here now for at 8:30 p.m. Eastern time. Every Sunday night, I go over the stocks that I'm watching throughout the week that are worth paying attention to, and we just break them down. And I've started a new thing too, and we're going to go over that in just a few moments about when I was right and when I was wrong about last week, stocks to watch and where they went. And just go over those real quick. I'm going to do this segment from here on out. I think it's going to be a really cool thing. I'm going to put a name to it. I haven't quite figured that out yet. I would love to hear you guys' suggestions if you have any. You know, I always love reaching out to the community to get some feedback, so certainly would appreciate that. But yeah, I mean, basically what's going to happen on Stock Watch Sunday is that I go over the top stocks that I'm watching throughout the week. It is going to be a crazy and wild earnings week this week. So I'm going over 20 of them. So I hope you guys are prepared for it. I'm not going to go over all the charts and in-depth stuff. I'm just going to run it down kind of like a hot take on each one. And then I'm going to open up the phone lines. You guys can call me and ask me any questions that you would like. Or obviously, you can also put them in the chat here. I see some people rolling in. You can feel free to do that as well. One thing before we get started, I also just want to extend the offer to you guys for two things. One of them is going to be the Chaos Crew, which is a channel membership. And you guys have been loving this so far. I've been seeing some really great responses. A lot of you guys have been signing up, and I'm actually taken aback by that a little bit. I'm a little surprised about the number of people that have signed up for the Chaos Crew. But basically what it is that for $4.99 a month, you can sign up, and you get a watch list from me every single day of the trading week. I give you a small group of stocks that I'm watching before the market opens, so that you can be prepared and be ready for when that bell rings. So if you want to be a part of that, click the join button. Should be right down here underneath of me, and then you can be a part of the Chaos Crew. Would love to see you there. Also, I have the daily mentorship as well. If you want to be a part of our exclusive community over at Own the Chaos mentorship, it is I'm offering 1 month free for everybody. So I go live with those folks from 9 a.m. to 10 a.m. Eastern time, just like I'm going live with you right now. You can ask questions. You can look at the things that I'm looking at, pick my brain. Why am I trading the things that I'm trading? And I'm offering it to you guys for 1 month free. So if you hit the promo code STOCKS by clicking the link down in the description below for the mentorship, I would be happy to see you guys there and get your 1 month free. Everybody's been receiving it really well, and you guys have been amazing. This channel has been going off this month. I don't know why, I don't know how, but I certainly appreciate the love and support that you guys have been giving me. So just keep it going, guys. If you get value out of tonight's video, of course, I would appreciate that thumbs up. And let's get started. So crazy earnings week this week. Lots of big names. We got Amazon, Tesla, Facebook, Apple, you name it. All the household names are going to be on earnings this week. So it's going to be a very important week for a lot of reasons. I don't know if this is going to really impact the stock market as a whole. I think that we're going to see some wild volatility based off of how well or how not so well a lot of these stocks end up turning out. So we'll get into that in just a second. But before I do, let me go ahead and talk about where I was right, where I was wrong for last week. So Netflix, I said that they would beat earnings, and they missed them actually. So the earnings were estimated at $1.61. They missed it by 4 cents at $1.57. So not a big deal. 422.96 was the closing price on Friday before Stockwatch Sunday last week. It went all the way up as 485 after hours when earnings came out. But I still think that this is definitely a buy and hold. You know, maybe it comes down a little bit more, but don't expect it to come down too much more. They added 16 million subscribers. 64 million people watch Tiger King, if you can believe that. Unbelievable numbers. After hours, like I said, spiked up to 45. You know, I still think, like I said, this is a solid, long-term hold, long-term buy. We'll see. You know, I mean, when people start going back to work, will Netflix come down? I'm not sure. I think it's going to be an interesting, I don't think people are going to all of a sudden just cancel their subscriptions because they're back to work. I think that the people that do sign up will most likely see the value in this, and they're not going to just cancel because they're back to work. I think Netflix is cheap enough to where most people probably won't end up canceling them. I think that the numbers will only go up from here. Delta. We knew they would have operated a loss. Their earnings per shares expected was 71 cents, a loss of 71 cents. The actual was 51 cents, which I said that they could end up beating that. So they did beat it by a little bit, which is encouraging, I guess. Wasn't as bad as people were expecting it to be. I said it would bounce off the lows. Sure enough, it did. I still say this is going to be a long play. If you're looking for something long-term that you're going to be holding on to for a year or longer, I still like Delta down here in the $22 range. I don't think you'll be disappointed once people go back to work and demand comes back for air travel. Sam Adams. We talked about Sam Adams last week. I said earnings wouldn't matter, but sales would. They did miss earnings, and the stock tanked after hours, but surged back as expected, as we all expected them to on the outlook of their sales. Sam Adams climbed from $400 to a high of Friday at $439. So that was a 10% gain if you guys were able to get onto that Sam Adams dip. Congrats to you guys. And this was a big head scratcher to me as well, was Domino's Pizza. So ticker symbol DPZ. I said they would crush earnings, and they did. They smashed them. Estimated earnings was $2.29. They beat them. 307 was the actual earnings. It spiked to $403 and then tanked on the same same store sales numbers, which we all knew they were going to be low anyway. I don't know why people were surprised by that. Settled back down to that 366 support that I actually talked about last Sunday. And I still think that this is a buy down in this 366 range. I think that Domino's rebounds once people start to realize Domino's isn't going away. I mean, they're just not. And I still say, that 366 number is going to be a really good, solid support for Domino's. So 34% of NASDAQ is reporting stocks this week. And we're going to run down all of them, folks. Are you ready for this? Are you ready for this, John Musil? Are you ready for this? Let's go, Blade Runner. All right. 3M. This is all Tuesday. 3M. Ticker symbol MMM. Tuesday, pre-market earnings come out. Estimated earnings per share are $2.02. Probably beats, but I would just trade it and don't invest in it. The only thing that they have going for them is the face masks. That's it. Their financials are not good. The rest of their company has not been in very high demand. They had a poor business model going into issues with the Rona, and then face masks is basically what's keeping them afloat right now. I don't like 3M. I would say, like I said, trade it, but don't marry this thing. UPS, estimated earnings pre-market on Tuesday still. We're still on Tuesday. Estimated earnings per share is $1.23. Most people are saying that they miss. I think that they actually beat as a result of all the e-commerce that's been going on. I would wait after earnings, though, to buy, but still like anything under $100 if it dips down that low. Caterpillar pre-market earnings are going to be $1.77. I say that they probably miss. There is some encouraging things coming out of China, obviously, with demand, but with oil demand being so low, I mean, Caterpillar was struggling before the stock market crash. I don't think that it's going to be a very good outlook for Caterpillar. One of the biggest issues they had was the trade war issues before all of this. So there's just been a lot of ups and downs when it comes to really China being the main factor here. AMD, my favorite stock this entire week, is going to be AMD after hours earnings on Tuesday. Estimated earnings per share is 18 cents. I think they beat those. Computer sales across the board has risen for the month of March. Computer sales were up by 10%. Monitor sales were up. They doubled. So I think that AMD is going to crush earnings, and I think they do well. If you want to buy half before earnings for AMD and then buy the other half of your position, whatever position side you want to get into, I think that's probably a solid approach. But I think that AMD probably has a very similar reaction to what Intel did. Everybody kind of sold off Intel and then bought it right back up on Friday. If you guys were part of the mentorship, we rocked that trade on Friday. Absolute amazing gap fill. I think AMD probably has a similar reaction. That's why I'm saying if you want to buy half of the position on AMD before earnings and then maybe wait to see what happens after earnings to make the other half of your position size there, I think that's probably a good idea. Google, well, Alphabet, let's put it that way. GOOG is ticker symbol. Estimated earnings, and this again, we're still after hours on Tuesday. $10.97. I think they beat, but the price is baked in right now. And we're going to get to a lot of these other tech stocks that I think are very similar as far as the price being baked in here. Expect us to run into earnings, folks, but I would be out of this and maybe back, and I think I would be out of this and then probably look to see after earnings what the reaction is. I think there'll be a lot of selling of the news. They're relying on a lot of the cloud services to be the focal point of their earnings outlook here. And I like a dip after earnings, maybe around $1,175 is probably going to be the area where it probably pulls back to. So be on the lookout for that price point. Starbucks after hours on Tuesday still. Estimated earnings is 31 cents per share. I think they missed that number, but I think there's some encouraging things that we need to look for on Starbucks. The report's likely to reflect impact on China closures and also the U.S. Outlook for next quarter as stores have now reopened in China and the U.S. looks to try and reopen business. Don't expect people to be paying for overpriced coffee anytime soon, especially with the economy being the way it is. And I'm sure that people aren't going to be spending money on things that they don't need to buy. But I think it's encouraging to see that Starbucks has been reopening in China. And I'm curious to see what sales look like in China, because even though the stores are opening back up, I think people in China, and we still don't know what's going on over there, but I think people in China probably are not just racing out of their homes to go buy up some Starbucks. I just can't wrap my head around that. So it'll be interesting to see what Starbucks does. This would be another one that I would wait till after earnings call to see what a worthy investment would be. But I think it probably ends up coming back down to around $60 before it becomes oversold. Boeing pre-market on Wednesday. So we're now into Wednesday. Boeing pre-market call. Estimated earnings are at a loss of $2.08, coming on the heels of reopening production facility in Seattle and after they terminated a joint venture with Embraer valued at $4.2 billion. So they canceled this on a whim, and now Embraer's probably going to sue them. This is a Brazilian company that they wanted to do business with from a manufacturing side of things, and then Boeing just pulled the plug, and now Embraer's pissed. So I think that that's going to be something to consider. Might be a rough week for them. That being said, Boeing actually rose last earnings report, revealing the worst quarter and year that they've had in 2 decades, and it still went up. The risk here is real, but propped up by the government. The U.S. military is one of our largest customers. Too big to fail, in my opinion. So this will be an interesting one for sure. I'd look to go, what did I say? Sorry, I had it all written down. I would look for this to bounce off of perhaps 185 and maybe even 150 if it gets down that low. But we'll see. If it gets below 150, I would say it's probably a no-brainer to buy on that one. I'd be shocked if it did get below 150, but we'll see. General Electric, GE pre-market on Wednesday. Estimated earnings are at 6 cents per share. I think they either meet or miss that, more so leaning towards missing it. The timeline to pay off their debt has been pushed back by at least 2 years, so that's not exactly a great thing. One of the biggest things that they rely on is actually building engines for Boeing, and so none of that's going on. But what I will say is that I think that demand for replacement parts and aftermarket is probably going to come back a lot quicker for GE, so I still like GE. If we could come back down to $6 a share, I actually like that buy. If you want to buy and hold on to that one, I think that that's definitely a sound investment for GE if you're willing to stick it out for the long term. But I think 2021, maybe even 2022, is where GE finally starts to turn it back around as long as everything goes according to plan. So that'll be interesting as far as GE is concerned. Spotify. Spotify is let's see. Company recently launched fundraising features for artists, allowing the artists to fundraise for themselves, which I think is a really good idea. It's also sponsored by Cash App. Their estimated earnings is at a loss of 49 cents per share. I think they beat this one. I think this is a really good stay-at-home play. We've been talking about a lot of the stay-at-home plays. I think this is a good one. And I like the support on the chart here at 135. So $135 a share. I like that support there. I would wait till after earnings comes out on this one just to see what it does. Wouldn't be in your best interest, in my opinion, to probably hold before earnings or play before earnings. Blue Apron, APRN, pre-market estimated earnings per share are at a loss of $1.28. I think this could go either way. I still like this as a buy after earnings, though. It could dip down to maybe $10 and then bounce off of that, so I would snatch some up there around $10. I think it's been holding very well up above $11.15. Now, granted, there hasn't been a whole lot of volume there, but we saw this once the Rona really kind of took effect. The stock market crashed, and everybody was like, well, everybody's probably going to be going over to Blue Apron to get these pre-made meals sent to them and everything else. So I still think demand is there. So it'll be interesting to see after earnings report comes out what the demand looks like for Blue Apron, and can they see the light at the end of the tunnel and get themselves profitable sometime soon. Okay, this is the big one. This is one of the big ones, Tesla. Okay, after hours earnings. This is blowing my mind right now. And I know this probably doesn't surprise some of you, but estimated earnings per share is at a loss for $1.22. They've been profitable, significantly profitable over the last 2 quarters. Okay. I think they beat this for one. And I think that they're still profitable for Q1 in 2020. Call me crazy, but I think that's what they are. I think they beat it. But nevertheless, I still think it's a wild card. I think it's priced awfully high right now. I think the price right now is baked into whatever people think the earnings are going to be. But, if they but they did post better than expected sales in China, even when China was shut down. Okay. So consider that. They delivered a record 88,000 cars in Q1. And I can't wrap my head around the loss with these numbers. Yes, they've been shutting down. Yes, they've slowed things down, but I can't for the life of me think that they would be reporting a loss. And I could be way off base here, but when you look at the sales and everything that they've been doing and accomplishing, and now they've actually been bringing people back to the factories this past week, calling them back to work. So it'll be interesting to see where Tesla goes. I think that Tesla actually still is profitable. If they are, I would say this thing goes through the roof. I'm not saying that, and I think it goes through the roof on hype. I think that the $750 range that it's at right now, after it's moved up considerably, I think it's still overpriced. So I would look for a pullback to at least $700. This probably comes back down to the $600 range if they actually do end up missing earnings, or they have a poor outlook on future sales because of the slowdown and the fact that they've had to shut down factories. But they're still talking about opening up factories in Dallas for the Cybertruck. They still are very much open for business. And so despite some of the slowing down that they've experienced, I think that Tesla still is something that I would be extremely bullish on. And if you're looking to hold this through earnings, good luck to you. I would, if you have to have Tesla before earnings, I would not, bet the farm on it. Okay. I would at least take some of that money and hold back until after earnings. So maybe you can get some on the cheap if for whatever reason it doesn't go your way. So be careful with Tesla. For the life of me, for everything in my being, I'm telling you that they beat these earnings, but you just never know. Okay. So I feel in my heart of hearts that Tesla beats earnings, and I can't believe that the estimated earnings per share is at a loss here, especially after the last 2 quarters. They absolutely crushed, annihilated their expected earnings. So we'll see. Next one's going to be Facebook after hours. Again, we're talking about Wednesday still. After hours as Facebook. Estimated earnings is $1.72. I think they actually missed that. Expect a pullback here. They should have waited. So if you guys caught Friday's video, I talked about how they announced the streaming service that's now going to be competing with Zoom. And I was scratching my head about this. Why would they wait Why would they not wait till earnings to release this news? But they're going to do it just under a week before earnings report comes out. I think there's a reason for that. The stock went crazy. I think there's definitely going to be a significant pullback. I would not be holding Facebook through earnings this week. Ad spend has dropped considerably. People aren't spending money on ads right now, especially small businesses and that sort of thing. So I don't think, which is Facebook's primary revenue driver. So I would not be bullish on Tesla going into earnings, or on Facebook going into earnings. I would wait till after earnings come out to maybe potentially buy at a good cheap price. But I would not be in Facebook going into earnings. It might even run into earnings. We'll see. Thursday, we're now into Thursday pre-market. Thursday estimated earnings on McDonald's. It's going to be $1.58. I think they actually beat earnings. If Chipotle is any indication of what the fast food industry is going to look like, especially with them people still being able to get takeout or order food through DoorDash, I think McDonald's actually beats earnings, and I think that sales actually surprised a lot of people, just like Chipotle did and Domino's did. Anything that's still staying open right now, restaurant-wise, people still have to eat. And I think that people that refuse to cook or can't cook or try to cook and it's just not edible, they'll just go order McDonald's or something like that. So I think that McDonald's does well. I think they beat earnings. I would wait, though. I would probably wait till after earnings to get into that one as well. This is one that I think that probably is worth the risk. Whenever you're looking at earnings, it's always kind of a crapshoot sometimes. You just never know which way it's going to go. But I think this next one I'm going to be talking about, it's pre-market on Thursday, is Kraft Heinz. This has always been a terribly run company. The financials on this company has never been great, but I think there's something to be said for what's going on right now and people actually cooking from home. So you have one side of the table, no pun intended, of people that are just ordering out all the time through DoorDash or what have you. And then you have the other side where there's people that, are still cooking from home. I mean, we've seen that with WSM, where WSM has been increasingly going up because people are buying more cooking utensils and stuff like that because more people are working from home. So demand is up as far as that's concerned. And I think demand's going to be up for Kraft Heinz. So pre-market estimated earnings are at 54 cents a share. I think they beat those earnings. Outlook should be good here. I think, people are looking for those comfort foods, the brands they recognize. Macaroni and cheese, that's Kraft. Cream cheese, Philadelphia cream cheese, all that. I think that they actually see an increase of sales. I think this holds above that $28.40 support, and I'd say this is a buy. Risk reward here, I think, is going to be good if you actually end up holding through earnings. I think you'll be fine. Amazon, after hours. Estimated earnings, again, we're still on Thursday. After hours, estimated earnings is $6.31. They likely beat that, but I think the price is baked in here. Consider this. I would likely be selling before earnings on Thursday's close. It's up 50% from its lows. So when the stock market crashed, it went down, it's up 50% from its lows. I think that it went up too fast, too quick. And the price per share is already, basically baked in here. So I think that this is going to be very much a sell the news type of deal. And I think that the price actually comes back down to maybe around $2,000 or at best $21.80. So I would wait till after earnings come out and look for some sort of sell-off. I bet that happens. Apple, after hours, estimated earnings per share are going to be $2.10. I think they either meet or miss those. And I think it's going to be similar to Amazon's price action. This has gone up. I think it's gone up too high, too fast. I love Apple. I think it's going to be obviously always a great long-term investment, but I think there's definitely a pullback after hours here. They were closed during China's shutdown. They closed stores here. I think there's going to be a lot of impact there. They've been relying on their growth to be from their app store and a lot of the apps that they've been buying. I don't think anybody's going to be buying a lot of apps through the app store when they have to keep food on the table or when they have to keep lights on or they have to pay the rent. I just don't see that extra expense coming in, and Apple has been relying on that to happen. So I wouldn't bet on them doing well on earnings. I would say that I would wait for after the earnings report to come out, and if it does pull back, look for it to pull back to around $270. That would be a buy for me. This is another big one, really big controversial one. GILD, which is Gilead, after hours, estimated earnings per share is $1.47. I think they actually meet those earnings or maybe even beat them. but I don't think it matters. The big story here with Gilead, we had a bunch of controversy within the last week about whether the trials were working or whether they weren't working. Gilead then come out and said that they didn't put the trials through because there wasn't enough people that showed up for the trials in China. So I guess we'll just go with that story. But the big story here is not earnings for Gilead. The big story is the U.S. trials that they've been going through with the remdesivir. We've been hearing some really positive things about remdesivir from other hospitals that have been using this. So we'll see. We'll see what happens. But I think that's definitely the factor here. But I think this is still going to be a risk. You're going to be getting into Gilead with the anticipation that remdesivir is going to actually be working. So I think this is extremely risky. Buy at your own risk, but I still think that $75 is fair value for Gilead. MGM has earnings estimated at a loss of 17 cents. I think they either meet or miss that. I would be out of this before earnings if I were you and wait for this to come down. Likely runs in the earnings on the news that we got from the Asian markets opening back up casinos and seeing demand come back there. I like this as a buy and hold after earnings. Anywhere between $13.55 and $14, I think is a sound buy. All right, we're on to Friday. And these are two that I think don't matter a whole lot. We have Exxon, that's a really important one, and Chevron. Pre-market for Exxon earnings are going to be estimated at 4 cents. I think they missed that for obvious reasons. It's oil, it's oil, it's oil. Stay the hell away. If it were me. But if you have to have that, you have to have Exxon for whatever reason, I still like it at $39. It's a decent support. Chevron, same situation. If you must have it, I like it at $79.95. Boom. Whew. Those are all the earnings, folks. What do you guys think? I know I missed Microsoft. I was just thinking about that. Microsoft also has earnings this week. They probably are going to be going along with the Apples and Amazons of the world. I think they end up doing well, but I would be out before earnings and then look for another entry after earnings if I were you, as far as Microsoft is concerned. But yes, ran through all that. What do you guys think? Let me get some of the comments here. Tesla's better than Bitcoin. I mean, I would agree with that. Just going back through here, I was wrong on Buffett Delta. He isn't definitely aiming for another billion. Yeah, I mean, I think that Delta is definitely a good long-term play here. I like it at $22. I think it's going to be a really good play for anybody looking for this in the long term. So I do like Delta. Blaber says 3M should be good to go. I think there's definitely an argument that can be made for that. But yeah, so AMD definitely. I think that AMD rips absolutely. I like AMD. If you want to hold, whatever shares you have in AMD already through earnings, I think that you'll be very happy with that, in my opinion. Getting bullish on Boeing, and I don't think there's anything wrong with that. But hey, yes, we are live, David. Okay, so let's see here. What other stuff we got? I'm going to open the phone lines up in just a second, folks, but I just wanted to see if there's any particular tickers that you guys wanted to check out. Yeah, I see 134 people are watching. If you guys could give me a thumbs up, if you got value out of that huge rundown on all those earnings plays, I would certainly appreciate the thumbs up, folks. So definitely would love to have your support. Twitter, sell before earnings. King Bradicus, I think that's probably a good idea. Twitter's going to be in the same boat as Facebook. Look, Facebook's not going to see the same kind of revenue they saw in the previous quarter because there's a lot of companies and even large corporations that have cut their spending on ads, and Google or Alphabet's in that same boat. So I would expect that Twitter doesn't actually have a really positive outlook. I wouldn't be in Twitter through earnings if I were you. That's just going to be my 2 cents. American Airlines has earnings on the 30th. They finally announced them. Yes, American Airlines is going to be wrapped up into the same boat as like your Deltas. I saw it. Southwest also has earnings. I guess they didn't announce them last week when we talked about it. Out of those two, Chuck, I like Southwest. American Airlines, I still think is very much in the top three as far as my airlines are concerned. but they got a long road to go. We really have to see what's going on with the debt and how they're going to be able to handle that and how much cash they're burning through every single day. So, but Southwest has a great balance sheet. Out of all the companies, they have the least amount of debt, but also they're the smaller company out of the big three that I mentioned in my previous video, which was American Airlines, Delta, and it just escaped me. American Airlines, Delta, and something else. Anyways, CCL, I think it's going to be lumped up in the same boat, Dominique, as your casinos. I talked about MGM. I heard CCL got some funding from Germany. I think a lot of the cruise liners did, since they weren't getting any money from the U.S., rightfully so. So I think that, I think that CCL is definitely going to be a sound investment when demand comes back for it. So let's go. No, it was not United Airlines, Mike. Not United Airlines. Okay. I don't like United Airlines. I don't know how many people missed this, but they had a huge offering, folks. Not a big fan of United. Okay. Phone lines are open. 443-281-3763. 3763. Oh my gosh. 3763. I'm going to put it in the chat here. Oh yeah. Thanks, Bradicus. Tough stuff about Domino's, Brad, but 443. I'm going to put this in here. 281-3763. And if you guys want to call in, we've had a lot of callers. We've been doing this for about a month now, and it's been fun. If you guys want to call in, ask me some questions, I would love to talk to somebody. I'm a lonely man. I got the cabin fever, folks. Give me somebody to talk to. 443-281-3763. And love to have you on the phone. Let's go ahead and Air Canada. How does it compare to Delta? I like Air Canada, OTC stock, actually. So Air Canada, I think they have a great CEO. And I do like Air Canada. I don't know what's going on as far as Air Canada is concerned and how Canada is supporting them. So that would be the first question I would try to get answered as far as that's concerned. But yeah, I mean, I think we'll see. I think they probably are better off than maybe some of the U.S. airlines, but we'll see where that lands. Looks like we got one caller in here. Hi, welcome to Stock Watch Sunday. Who's this? Or not? They just hung up. Okay, we'll wait for another one. Okay, let's see here. Yeah, Stitch Fix I still really like, Brad. WSM still been taken off. People kind of gave me a little bit of a hard time because I talked about WSM because it was already up to $50, but it's still climbing. It's almost at 60 now, so I still like WSM. Blade Runner likes JetBlue. JBL used the ticker symbol. I think that's going to be a good one as well. Okay, let's answer a question here for Matthew Schaefer. The Domino's Pizza I bought at $367 a few days before earnings, went up to about $390 before earnings, and then fell back to $367. Should a hold sell at this point? So, and that's from Matthew Schaefer. So Matthew, I still like Domino's. I'm still holding Domino's myself. I think it's going to hold really well here at the 366 area because they have nothing but positive things going on. The only negative thing that they had during that earnings report was the same store sales, which, no kidding, people aren't going into the store and buying them. So what I would say is just to hold off, be patient. I think Domino's comes back, and I do still like it here at the 367, 366 mark. Okay, so we do have a caller here. Hi, welcome to Stock Watch Sunday. Who's this?
Hi, Brad. This is HM.
Hey, what's going on?
Keep up the good work. It's really good show. I have a couple questions.
Sure.
Don't you think that the Q2 will be very ugly since the Q1 we only have only 15 days of lockdown on the business are really like shut down everywhere. And I do want to please to check on gold play that it's going up and it's still very cheap. It's called AKG.
AKG.
And there is another oil play that it's really cheap. I would like you to take a look at it because I trust you, to be honest with you. So yeah, it's RIG.
Okay. Yeah. So so here's my 2 cents on that. So anything gold related, I think, is definitely going to be a good thing. The first thing that I would do, though, is just stay away from the miners. But I do like gold. My favorite gold stock right now is going to be GOLD. The ticker symbol is just gold, simply gold. It's Barrick Gold. CEO is fantastic. It's been doing nothing but going up, and I think that gold's still very much if you're already holding on to it, I would just hold it. If you're looking to get into gold, I would definitely start to work into that for sure, because I think it does continue to go up. Anything oil related, I would stay away from, only because we've seen a short-term bounce on that, but I don't think that it's going to last. We're going to see oil reach capacity as far as storage is concerned, probably by mid to late June, at the latest, probably around July 4th. So I don't think that's going to be a very good play as far as that's concerned. I would wait to get into anything that's oil related until late summer to see if maybe there's any kind of rebound as far as that's concerned.
Okay.
All right.
Thanks a lot. Can you check on another one? It's bio, and I think it's gonna go up, but for maybe a swing trade in a week or two. AKER has very low float.
Yeah, AKER, I'm not a big fan of. They have a ton of debt. You said BIO was the ticker symbol. That'll be my last one. Is that right?
No, it's bio. AKER. Yeah, that's it.
AKER. Okay, yeah. So AKER is not something that I'm too big on, only because they have a ton of debt. Anytime they have the price per share run up, they always end up stocks like these, especially ones that are priced down around here. They end up doing a pretty significant offering, and I know AKER off the top of my head has a ton of debt, so they're going to do whatever they can to get rid of that, and they usually do that in the form of some sort of offering. So you could trade it, definitely something for a short-term play or something like that, but I would not be holding on to this if it were me.
Oh, okay, so I have a general question, to be honest with you. Isn't it better in these days, nowadays, to just trade like not day trade, like a swing trade every other day, like to sell and buy, not to hold the stocks, or no?
So I do both. I'm going to let you go after that. So I actually swing trade, things, stocks that I see that have potential multi-day runs, but then I'll also day trade things, get in and out, scalp a couple things, depending on whatever the catalyst is. I do a little bit of everything. I have long-term holds, but then I also, engage in the active trading as well, in the form of day trading or swing trading for short-term gains too. So I like both of it. I like all of it. I just love everything about the stock market, folks. So, great call. Thanks for the call and appreciate it. Again, 443-281-3763. Would love to have one more caller in here. Oil tankers that store oil. Now, I think there's something to be said here. So FRO, I see that John's asking about those, and I meant to actually talk about them. So I would say that the oil tankers, there's something to be said for that. I would trade them, though. I would not invest in these companies. The only reason that I'm saying that is because you have other shippers like Tops or DRYS. These companies have a ton of debt, and it kind of in the same vein of what I was talking about with AKER. I would say that they're going to be good to trade. I don't think they're going to be good to hold long term. They're going to, when they see any kind of significant move in their company, they're going to do some sort of offering or a reverse split. Happens all of the time with those types of companies. They just can't get themselves out of debt. So I would just be careful with those. Definitely good for a trade. There's obviously a lot of attention being brought onto them. I don't know if I like them for a long-term hold or anything like that. So trade them, yes. Hold them, probably would not stay married to them. Okay. Hoodie looking slick. This is not Stitch Fix. I have to admit, I was out of town a couple weeks ago, and I needed to get a hoodie because I was down south and was not prepared for it to be as chilly as it was. And I simply went into Target and bought this. So it's just Target. It's just some, I don't know, Sonoma or something like that. So it's a cheap hoodie, but yeah, I just got it from Target. What's your opinion on Zoom long term? And I'm going to get to you, Johnny Liberty. I just saw that one. My opinion on Zoom long term, I still say that Zoom's going to get to $200 per share by the end of the year. I think right now it's on a decent pullback. Here's the thing about competitors getting to the space and trying to compete with Zoom. Zoom's competitive advantage was that it was an early it made an early entrance into the market of video conferencing, and their platform is absolutely amazing. I use Zoom every single day in the mentorship. I use Zoom every single day to conference with my business partners, well before Zoom became all that relevant. So what I would say with Zoom is I would, just if you're looking to buy into it, wait for this to come down maybe a little bit more. I thought that maybe it'd come down to 160 and bounce off of there. Friday, it came down just below that and tried to make an effort to get back up to 160. I would say that maybe it probably comes back down to the 130s at worst, but I still like Zoom for a long play, only because I think that that's going to become more and more relevant, even as people are allowed outside their homes. Everybody knows about Zoom right now. So Facebook, they're going to have to play catch up, and I think it's going to be a long road for them. I don't think that they can really directly compete with Zoom on the level that Zoom is at. So I do like Zoom for a long-term hold. Got another caller here. Hi, welcome to Stock Watch Sunday. Who's this? Or not? Hello? All right, well, I'll have to let you go. Sorry about that. If you want to call back, please feel free to call back. I'll be happy to chat with you. All right. What's going on? Let's see here. So Johnny Liberty, what are your thoughts on NASDAQ ticker WTER? Let's take a look at that one. Okay, we got one more. I'll look at WTER. If you could just hold on one more second for me, I'll get to your call right there. Whoever's calling WTER, I'll get to this one real quick. Alkaline water. This is probably something that may end up doing well. Let me get here and read your comments here on WTER. Had a great March. I think that demand's probably end up going to slow down for them. We'll see. It's a penny stock theoretically, so just be careful with it. Johnny, I would just kind of trade it. Don't marry it. Once people are allowed back out of their homes, I don't know if you still have Coke, a lot of the other big brands, Pepsi, competing with alkaline water. I'm not sure how much more this moves. It's already had a pretty decent move from 80 cents all the way up to as high as $1.20. So just be careful with it. If you have a ton of money into this one, I would start to scale yourself out. Maybe hold off, just in case it decides to pop. Okay, let's get to a caller. Hi, welcome to Stock Watch Sunday. Who's this?
This is Chris Calawad.
Hey, Chris, how's it going?
Yeah, I just want to check, buying like the Boeing on also airlines. So is it time or it can wait or?
Yeah, sure. So, and I'll let you go. Thanks for the call. Appreciate it. Thanks for calling in. When I was talking about the earnings that are coming out with the airlines and Boeing, like I said, I think Boeing in a sense is just too big to fail. Their biggest customer is the U.S. government. And they took a lot of money from the U.S. government as well from the bailout standpoint. And despite what they're doing, as a company, they have the issues with Max Air. They had the worst year this past year in 2 decades, and the stock still went up. I just think that with it being priced down here and given where they came from, I still think it's on the cheap. So I'm not saying to buy it before earnings. I would say wait till after earnings, see what the reaction is. And I'd say anything below $150 is a no-brainer buy, in my opinion. As far as the airlines go, like I said, I think that they're going to do well. You just have to pay attention to the balance sheets. Whoever's got the most cash and is spending the less each and every day, probably going to be the ones that come out on this on top. So be careful with that. Okay. Hold on one second. All right, so let me get to one more call. I'll take one more call here. Hi, welcome to Stock Watch Sunday. Who's this? Where are you from?
Yeah, I just want to check Beyond Meat.
Okay.
Stocks.
Yeah.
Thank you.
Yeah, absolutely. Thanks for the call. So Beyond Meat, BYND, this is one that has definitely made some moves in the past, but I'm not sure about this one just yet. Demand is obviously going to be up because people are buying it off the shelves. I don't know how much demand is going to be up as far as the restaurant side is concerned, and I can't exactly remember where the earnings are going to be. I would say this, though. I would say I've never been a huge fan of Beyond Meat. Their financials still, they're still not profitable. This is a tough one, in my opinion. I would say that this has run up quite a bit. I would definitely wait for some sort of pullback. I like a support area, possibly around $95 or so. I think right now where it's been gapping up here over the last couple of trading days, that I would just wait for some sort of pullback. I've never been the biggest fan of Beyond Meat just because of their financials and the way they've been running things since their IPO. But I would say that if you want to play this, right now is a little bit too late to get in, and I would certainly be waiting for some sort of pullback. So I would just wait to be getting into Beyond Meat. All right, so had some really good calls. I'll take one more. Anybody wants to call in, it'll be 443-281-3763. King Bradicus says nothing's going to upend Zoom from corporate America at this point. I would agree with that. I think Zoom has made their stance in the market, and I would say that nobody's going to be able to take them down unless it's something really significant. Any decent OTCs? Here's the thing about the OTC markets. It's been really tough for them. The SEC has been cracking down on them hard, and some of the cracking down on the suspensions that the SEC has been carrying out has been unwarranted. A really good example of that has been PRED this week got suspended. SEC felt as if the product that they were putting out actually wasn't real, that it was fake. Pred is a very real company. PRED got wrecked by the SEC, and I think that the SEC is probably going to end up getting sued from them because they wrongfully suspended them. There's been a couple of other over-the-counter penny stock tickers that were affected. Some of them were warranted, but as far as the SEC is concerned, there's plenty of other penny stocks in the OTC that they should be going after, and they just don't. But for whatever reason, they're going to go after a company like PRED. They have partners like Thermo Fisher on their side. They're not a fake company. They're not going to put fake PRs out there. So it's just really risky to be trading anything in the OTC right now, and it's unfortunate. There wasn't a whole lot of volume going in there before all this happened, and now it seems as if there's going to be even less volume going into the over-the-counter market. So it's been unfortunate, but it is what it is. Okay, I'm going to take one final caller here, and I will go ahead and bring them on here. Hi, who's this? And let me know where you're from.
Yeah, this is Chris from the Bay Area, San Francisco. I want to know about airlines. Is it time to buy airlines, Delta Airlines, United Airlines?
Yeah, so thanks for the call, and I'll let you go here. I just spoke about this, but I'll go ahead and answer again. I do like the airlines long term, but pay attention to the balance sheets. Thanks for the call. You guys are killing me. This guy could have his own radio show. I appreciate it. So let's see here. Peloton has been getting more orders lately. For stay-at-home orders? I think Peloton's probably a good one. They do still have to get profitable, but I would say Peloton's probably a good one. Disney. I like Disney. I like Disney a lot. Fair value for Disney. I would say any dips below $100 per share is probably a buy for me on Disney. Okay. So this has been great, guys. Chris ain't afraid to call. No, he ain't. Okay. That's going to do it for me, folks. Thank you so much for tuning in. It's going to be a wild week. What I will say is that anytime this is my final thought, if you're going to be holding through earnings, just understand the risk. Sometimes, and we saw this with Domino's. Domino's had amazing earnings. Their numbers crushed all expectations, and the stock still came down. Because earnings is always going to be an extreme risk no matter what the outcome is as far as earnings are concerned. Just because they're positive earnings doesn't mean or equal that the stock goes up. So understand that going into earnings week, that if you're going to be playing anything through earnings or over an earnings call, that you understand the risk that's involved. If you're a long-term investor and you don't care what happens from the day-to-day, this probably doesn't apply to you as much. But if you're going to be an active trader, if you're going to swing trade something for a couple of weeks or a month or two, then I would say exercise a lot of caution when it comes to holding over earnings plays, and that only if you can afford the risk that you would hold through this. And that's why I was making some suggestions about taking a position size that maybe you were planning on taking, cutting that in half, maybe buying that before earnings if you felt really strongly about it. That way you had the other half of that position size to maybe hop in on that after earnings. Maybe they start to do well or what have you. So that would be my take. Please, like I said, just be extra cautious. If you don't like holding through earnings at all, then don't. I think there are still ones that I would watch after earnings to see what the reactions are, so you can make good trades on them. And that's going to do it for me, folks. Man, what a marathon. What a Stock Watch Sunday. If you guys got value out of today, I mean, I ran through 20 tickers, in 10 minutes? Maybe less than that. I was screaming on all of them. So I hope you guys enjoyed that. If you did, if you got value out of it, if you learned something today, if you just want to support this channel, please, guys, give me a thumbs up. I certainly would appreciate it. And I'll catch you for tomorrow's video that'll be going up Monday, Wednesdays, Fridays. And if you're not subscribed to this channel, hopefully I earn a subscription from you today as well. Please make sure you're checking out the Chaos Crew over and click the join button if you want to get a watch list from me every single day. And if you want to be a part of the morning mentorship, again, enter the word stocks, promo code stocks, by clicking the link down in the description below if you want to be part of my daily mentorship. I go live with folks from 9 a.m. to 10 a.m. Eastern time. And then I'm with them all throughout the day in a private Discord chat as well. There's people that are in this video, in this live stream right now, that are in the mentorship, and they can attest to what a great community we have. There's been a lot of new folks as well. I hope they've all been feeling welcome. I can trust that they are. And if you want to be a part of that, you can be a part of it for 30 days free by entering the word stocks at checkout. And you go ahead and click the link down below to be a part of that mentorship. I'd be happy to see you there. All right, guys, that's going to do it for me. As always, I will see you all before the bell. B. Smith is out. Have a great week. Good luck out there, and I will see you tomorrow.